Today the network is a bit slow, so it's taking some time. I don't know why. But so please have patience for me. All right. Can you hear me? Can you hear me? Hello.
Good morning,
Yes,
good morning, sir. We are getting
yes.
on you.
All right. So when it comes to corporate tax liabilities, all right, most of the time we have different categories of companies, all right. So since we have different categories of companies, you must know how the different kinds of companies work and how to, come up with their tax liabilities. Okay. So usually their tax liabilities can be established from two ways. Okay. Either you start from the top, okay, by getting the revenue and lessen allowable deductions, right?
Right.
That is one aspect. Or you can start from below. That is when they give you the profit for the company. Okay, so that is where they give you the profit. If they give you the profit for the company, then you take the profit and then you work back. All right, so there are different ways we can work on this. I hope when I speak, you can hear me.
Yes, sir. We are getting
Hello.
you. We are getting you, sir.
Yes. Yeah. So I was telling you there are two approaches. People are just stuck with one. All right. That is why they mostly feel corporate tax liabilities. It's not every question that you are going to have to start with profit. Okay. So when you are establishing corporate tax liabilities, okay, when you're establishing corporate tax liabilities, I told you there are how many approaches? I told
There
you
are
there are
two
how
types
many
of there are two types of approaches.
Okay. And what did I say were the two approaches?
It's not all that it's not all the time you begin with profit.
Yes. So this is when you take what? Your income, okay? Your income and less allowable deductions, right?
Yes, sir.
So remember the time we did insurance, we took our what? Our gross premium and the rest, and we took allowable deductions. So this is one of them, right? So here you can take your income, okay, that is in the question, and then you are going to less what? Allowable deductions, including capital allowances and other ones, right? So So income minus allowable deductions. Then you come and get what? Your chargeable what? Income. All right. Then you tax at the percentage, right? Good. This is one method. Another method is the normal type we know. That is the add back style, right? The accounting adjustment approach or the tax adjustment approach. So with the tax adjustment approach, that is where you build from the profit. So this is a common type we know, where you are going to take your profit per the account or your profit before tax, okay? And then you are going to have to less any excluded income, right? So if there's any excluded income, you are going to take out the excluded income. So in our law, when you visit section 5, we have excluded income, right? Income that is not supposed to be part of business income. So you are looking at exempt income, income that is exempt under section 7. So exempt income is not supposed to be part. And then you are looking at what? Incomes that are final withholding payments, like rent for commercial and residential property, like dividends. They are not supposed to be there, right? They are supposed to be taxed final. You guys remember, I believe some time back I talked about this. So final withholding payments are not also supposed to be there, right? Yes. Then once you take out these, okay, you are now going to add back disallowed deductions. So any expense that is what? Disallowed. So disallowed expenses. So in our law, when it comes to disallowed expenses, there are quite a number of them. What are some of them? What are some of them?
Depreciation.
Depreciation. Yeah. So expenses that are not wholly, exclusively, and necessarily incurred. Then we have what? Expenses that are of capital nature, right? Then we have excluded and domestic expenditure, right? Excluded domestic expenditure. These expenses are all disallowed, right? So once you're able to get these expenses, you're going to have to add all of them back. Then you come and get your adjusted what? Profit, right? So this gives you your adjusted profit or your accessible income from business. Then you can now come and what? Less allowable deductions, right? So you now come and less other allowable what? Deductions from this. So after you less your allowable deductions from this, you are now coming to get what? Your chargeable income, right? Which you are now going to what? You are now going to tax. Please, I hope you are writing it down.
Yes, sir. We are taking note.
Okay, so put it down quickly and then let's come and look at other tricks that some questions can introduce, right? Apart from this, it's not only this. Sometimes they can introduce some tricks and we must understand those tricks and then I think we should be fine, right? So put it down and let's learn how to capture our bag of tricks. If you're done, you let me know. Oh. If you're done, you let me know. Okay. So mostly when it comes to corporate tax liabilities, as I was telling you, we have different types of corporate tax liabilities, right? So if you are supposed to actually break it down in your exam, right? Corporate tax liabilities can come from one, merchandise or manufacturing companies, right? And that's a common type where usually they bring these tricks, right? It can also come from the taxation of permanent establishment, right? Taxation of PEs. This is where you usually do branch profit tax, right? Branch profit tax. It can also come from charities and trusts, okay? It can also come from the taxation of trusts, okay, because trusts are taxed as entities. It can also come from the taxation of exempt entities. So charities, building societies, friendly societies, mutual funds, all right, and then retirement funds. So these are also corporate tax liabilities. It can come from the taxation of mining and petroleum operations. Are you writing it down? It can come under the taxation of insurance businesses. Please, are we there? So this is the common area where usually there are issues. Yes, the others can provide issues, but mostly students are used to merchandise and manufacturing companies where we have cost of sales. But sometimes you can go and then you don't see cost of sales. What do you do then? Do you get it? That's where a lot of people struggle. But I believe you guys are not going to struggle now, right? I believe we are not going to struggle now. Please hurry up and let's solve the question. All right. Put it down quickly and let's solve the question. Yeah, then you let me know. If you're done, you let me know. Yes, we have less time. So if you are done, we are done. Then I know. Rather than keeping quiet, I wouldn't know whether you are done writing. There we are done. Trying to open. I'm trying to open the question. Trying to open the question. But you can ask questions as I skim through the questions, right? Please hold on, I'm trying to open. You see my screen, you let me know. All right. Today the network is a bit, so everything is slow.
The screen is paused. The video
Yes.
is paused.
Yes, I'm trying to open the question from another reader. It's a bit slow. I don't know why. But I'm still taking questions. So if you have any questions concerning the areas I'm still taking some questions. I don't know why the piece behaving that. I'm trying to open the question, but the question is not opening. Oh, what is wrong? This thing is disturbing me. Oh. Please hold on, eh? It's still loading.
Probably you need to restart the computer.
If I restart it, if you guys will wait, I don't have a problem. I can restart.
Yes, assuming I will wait. I want to learn something.
Okay. The rest, can you wait? If you can wait, because some people will be going to work, or today, no work for everyone.
We are going to web, but we'll manage it.
We have no. Wait.
Okay. Okay, then let me restart because the way the machine is behaving, I'm trying to open this thing and still, let me see. It's okay, it has opened. It is opening. Can you see my screen now?
Yes, yes, yes.
Okay. Still a bit slow. Let me see. I said we are looking at corporate tax liabilities, right? Corporate tax liabilities. Yeah, there's a question I want us to solve. May 2018. Okay. Can you see my screen?
Yes.
Yes, sir.
All right. So now we start the journey. Sorry, we have delayed a little. So what is the requirement of this question? The question said we should calculate the capital allowances claimable by Sechiwa Anam Industries for the year ended 31st December 2017 using all the available information. That's 8 marks. And it says we should calculate the chargeable income of Sechiwa Adam Industries for the year ended 31st December 2017 and the tax payable, and that's 6 marks, right? When you get a question like this, what's the first thing you have to do? What's the first thing you have to do when you get a question like this? Yes, my people. What's the first thing you have to do when you get a question like this? I'm asking the class, what's the first thing you do when you get a question like this? Yes. Why is the class quiet?
Is it the name of the company?
The name, okay. But I meant, what do you do first? Are you going to start computing the income or you are going to start with capital allowance?
Capital allowance.
So for me, I usually prefer computing the capital allowances first. I usually prefer computing the capital allowances first. I don't know if you can see my screen.
You can read your screen.
All right. You can see the question.
The question is by the screen.
Is it visible now? Quite visible.
Yes.
All right. So to establish your capital allowance, first thing we do is, as you said, the name of the industry, right? The name of the company. So Sechiwa Anam Industries, right? Industries Limited. Then we say what? Computation of capital allowances for the 2016 and 2017 years of assessment, right? Okay, so you can write this. Now let's go through the question. It says what? Sechiwanam Industries Limited. What do? They manufacture personal hygiene soaps. Now, if you are doing advanced tax, always be cautious of the kind of entity. So far as they bring manufacturing, you know, definitely manufacturing has some incentives, right? Like locational incentives. Do you understand? So something like locational incentives can come in, right? So it manufactures. Apart from that, manufacturing, what else has manufacturing in common? Manufacturing plant has a different rate for capital allowance, right? Pool 2, but all other plants are going to pool 3, right? At their factory in Takrady, you see locational incentive is in a regional capital. Please, are you all following? Are you all following?
Yes.
Now, if look at it, they said the company commenced business operations on what? 1st April 2016. That means they didn't follow the regular accounting year. They didn't start operations in January. They started in April. Are you getting it? They didn't start in January. They started in what? April. Means that the commencement year was not a full year. So for 2016, they weren't a full year. And they had an assessed loss in that 20 what? They had an assessed loss in that 20 what? That 2016. You can see. So that loss will be carried forward to the next year. in which we are for the period ended 31st December 2016. That means their accounting year ends on what? Their accounting year ends on what? 31st December, and they
31st
started in
December.
April. You get it? So you must always be cautious of these dates. They are very important. All right. Now they recorded a net profit of 762 what? They recorded a net profit of what? 762 800. We can see that here, right? Okay, for the 2017 year. Okay. Now, after they took into account the following transactions on the P&L, there are some transactions that are not supposed to be on the P&L, but they put them there. First of all, gross rental income of 180,000 that was received from renting one wing of their office building, right? The rental income portion constitutes 10% of the office building. So my question is, gross rent, yes, it's an income, but if you rent your office building, that income, is it supposed to be on your financial statement for tax purposes? Is it supposed to be on your return? Is it supposed to be on your return? Oh, I'm asking the class a question. The format I gave you, we said something. We said after you take your net profit, what do? You less what? Excluded income.
Income.
And within the excluded income, you saw final withholding payments there, didn't you?
Yes.
And rent, is it not final withholding? If the person is not in the business of real estate, rent on residential and commercial properties are excluded because they are taxed separately. So that gross rental income that is included in the P&L is not supposed to be there. You have to take it out. Does that make sense?
Yes.
And then if your office building is 100%, it's a depreciable asset. It should get capital allowance. Is that not so? So if you should get capital allowance and you are renting 10% of it, it means what portion is going to get capital allowance?
90%.
Only 90%. Are you getting the trick now? So you see how the trick has been spread across. Okay, now net interest received on bank deposits from Ghana Commercial Bank of 10,028, right? And they've already taken what? Withholding tax of what? 10%, 8%. So this interest that they've given you is the net interest. All right. So if they have given you the net interest, that net interest, we need what? The gross. So the net will be taken out, then we replace it with the gross because we need gross interest in our accounts, right? That is what we can tax because interest is what? On account. Then registration of trademark at a cost of 75,000 in respect of the company's personal hygiene soaps is to last for 10 years. Now, if you register trademarks, they're intangible assets. Which pool would they go? Which class would they go to? Which class would they go to? That is
5.
class 5.
5.
So intangible assets are class 5 for 10 years, right? But they said what? The research and development expenses incurred in connection with these soaps amount to 15,000. And the company intends to expense it, right? Because it goes in line with what? R&D expenses under what? Section 13. So this one can be expensed. And the legal cost incurred to complete the registration of the trademarks was 5,000. Now, let me ask you a question. This legal cost for registering a trademark, would it be added to the cost of the trademark or it will be expensed separately?
It will be added.
It should be added because to register the trademark, the legal costs are directly attributable to the cost of the trademark. So it should be added to the trademark, right? But all these things are in the P&L. Should they be there? No, they shouldn't. Do you understand? A donation of 120,000 worth of furniture was made to local government assisted school as part of the company's CSR program, which was duly acknowledged by Ghana Education Service. This one, should we allow it as a deduction or we shouldn't?
It's an
We
allowance.
Is it
should.
Allow.
We should.
It's a worthwhile cost, right? So we are
Yeah.
going to allow it. Depreciation of fixed assets, 57,000. Allow or disallow?
Disallow.
Okay. Replacement of 2 motor vehicle engines. It's an improvement to the vehicle, right? So repairs and improvement will apply, right? However, you can also state your assumption and add it because engines are huge components of a vehicle, right? So those
Mm.
ones, what we can do is that we can actually say that they are huge improvements and just add them to the pool. They'll mark it for you, but they prefer you do repairs and improvements, right? Under section 12. All right. So there were exceptional costs amounting to 150,000 as a result of what? The production manager sustaining an injury while working on one of the production lines in the factory. All right. So the production manager was rendered incapacitated and resigned as a result of the incident. So we incurred exceptional cost of 150, but this exceptional cost, we need a breakdown. So it is saying that 35,000 of the cost relate to a payment made to the production manager as severance pay. Okay. 110,000 was used to acquire additional what? Computers. And the remaining 5,000 represent fines imposed by the factory inspectorate department of the government following the incident. Now, you incur 150. Out of it, 35 was made for redundancy or severance pay. That one is allowable, right? It's
Yes.
something that an injury that has occurred. Okay. But acquiring additional computers, does it belong to the P&L? Additional computers,
No.
capital nature, right? Shouldn't be here. It's a capital item. Fines and penalties, excluded expenditure, right? It shouldn't be here. Then we bought a computer server at a cost of 20. Should it be there?
No.
No. Right? So these ones are supposed to be what? Disallowed. Now it tells us that the details of the company's other fixed assets at cost are provided below. And these were all constructed during the year 31st December 2016. All right. It means that we can use this for the 2016 information. So let's get the capital allowance. So I first need what? I'm going to put my class of assets there. Okay. So we have what? Class 1. That is 40%. They are all reducing balance. So I like to separate my pool 1 to pool 3 assets or class 1 to class 3 assets. Why? Because they follow the pool system and they are all on reducing balance, right? That's how I do my capital allowance. Why do I do that? Because these ones follow the same rule. I like to put these ones work together, and also because of space, right? So I do class 1, class 2, class 0, pool 1, pool 2, pool 3. Then my total capital allowance comes here. These are you following? Then I do a separate one for the other pool 4 and pool 5 assets, like the buildings and the rest. I also do a separate pool for them. Are we okay? But one thing that I want students to do is that, you see, sometimes you can get assets in the same category where you are adding them. People add them on their calculators without giving a breakdown. So you miss marks for that. Let's say you have 2 pool 2 assets. Do you understand? You add them up on your calculator and put it there. How did you get the total? You have to create a working for your assets. So I call it the classification of assets. Please, are you following? Did you understand what I'm trying to put across? If you don't understand anything, let me know. Did you get what I mean?
Yes.
Yes.
Yeah, so I do a classification of what? Of assets. So the classification of assets, I'm going to group them according to the pool, right? Because in the pool system, each individual asset loses their identity, right? And becomes one with the pool. So this one, I'm now gathering the assets that I have that fall here. So that's my working. So I have what?
Plant and
Office,
machinery.
plant and machinery, right? Plant and machinery, which pool is that? Pool 2, right?
Pool
It goes
2.
to pool 2. Then office building, that is building. It's on its own. Furniture and office equipment. Furniture and office equipment. Where does it go?
3.
Plant and machinery ideally is supposed to go to pool 3. But why did we put it under pool 2?
We got it manufacturing.
Because it's a manufacturing company. Thank you. Are we okay? So furniture and office equipment, pool 3. Then we have motor vehicles, goods vans. Goods vans. Where does it go?
Pool 2.
Pool 2.
Yes. What if it was Toyota Land Cruiser? 130,000. Then we would have
Pool
limited.
2. We limit it to 75,000.
But these
5,000.
vehicles, it means that it is a commercial vehicle, right? It can carry more than half a ton or more than 13 passengers, right? So That is it. More than half a ton or up to 13 passengers, right? Then computers. Where do we put computers?
For
One. So that's 30,000. Now, this thing that's working for it, students don't know. They type it on their calculator and put the final figure there. How did you get it? Are we learning something? Yeah, so you do this working to give a breakdown of the asset, right? So this one gives us what? 640,000, right?
640.
And this is still 60,000. Okay, good. So we have been able to do this one. That is good. Now, the next thing is to go back, and we are in 2016, right? So I put down my 2016 year of assessment, then the basis period. This is very important. Now, the basis period. When are we reporting? From when to when? We are reporting from 1st April, right? Yes. So we are reporting from 1st of April 2016 to what? The 31st of what? December 2016, right? So how many days is that? 275 days, right? So always indicate it so that you know that whatever capital allowance you are getting is for those number of days. Do you get it? Please, are we okay? So every capital allowance you get, you are going to apportion it according to those number of days. So in that case, let's start. This was the first time they bought it, so I can indicate the cost. So we already have the cost from our working, right? 30,640 and 60. So we have 30,000, 640,000, and then what? And 60,000. Please, I see students who add this and put the total there. Not bad, but it's a time waster. Just add the capital allowances at this side. That's why I wrote total capital allowance. Is that okay? So this was the very first way. These were actually the additions. So I just need my capital allowance. So capital allowance, I will do, no matter the capital allowance I do 275 out of the 365 days in the basis period. So in Ghana, capital allowance is always calculated as full year. Okay, it's a full year depreciation, unless you did operate the full year. Are we okay? So capital allowance is actually given as the capital allowance percentage times the depreciation basis, right? What we are applying the percentage on times the number of days in the basis period. Okay, number of days you operated in the basis period over 365 days. Do you understand? So if this was, let's say, 40%, you are going to apply on the depreciation basis. Then you are going to apply by what? The number of days over 365. Are we okay? So looking at this one, the depreciation basis is the cost because these were the actual additions. So we are going to multiply what the 40% by this before we multiply by this. And it applies to every asset in that year. So far as you did operate for the full year. Does it make sense?
Yes.
So always check if the person did operate. People always miss this. Please don't. Is it clear? So we take our 30,000, multiply by our 40%, multiply by what? 275 out of what? 365. And that gives us what? 9041, right? As the capital allowance for that year. Now we do the same for the 640,000, going by what? 30% going by the 275 out of 365. And that's 144,658. 144,658, right? Then we need the 60,000 going by 20% going by 275 out of 365. And that is also 9041, right? 9041. Okay. You are supposed to put the total capital allowance at this side, right? Yes. So that is how you do, you add them up. But we are not accounting for 16. We actually need 2017. This was just there so that you use it to work and get the 2017. So this gives me my written down value carried forward to the next year. That's the 2017. Right. So 30,000. That's 2959. 20,959. All right, then we have 640,000 minus 144,658. And that's 495,342. 9,342. Okay, then we have 60,000 minus 9041, and that's 5959. 5959. Okay. So now I start with 2017 year of assessment, right? What's my basis period? In 2017, we would have operated the whole year, right? So 1st January 2017 to 31st December, right? So that means we operated the whole year. So there's no need to apportion the capital allowance. Do you all agree?
Yes.
Yeah, so in that case, that is what 365 days out of 365 days. So for the whole year. So we bring our written down value brought forward. We have our 2959 495 342 5959. Okay, so were there any additions during that year? Yes, there was. We can find it straight in the question. All right, so when we check, what additions did they bring? So this was 2016, right? 2016. Now let's go to 2017. In terms of, I'm talking about our classification of assets, right? That was 2016. 2017, did we buy any new assets? Did we buy any new assets? Yes, we did. When you look at the question, we bought trademark. Here we are just doing put 1 to put 3. We bought trademark. We bought computers, did we?
Yes.
Didn't we buy computers?
We did. And server.
Okay, how much? Yes, we bought additional computers for 110,000, right? And we bought computer what? Computer server. A server is a physical machine. 20,000, right? It came to add up. So that means we have what? 130,000. Not so. Okay. So there were additions to put 130,000. Okay. But was there any other addition to the other pools? No, there wasn't. But however, we replaced 2 motor vehicle engines, right? So repairs and improvement will come in. Are we okay? So I can come here and say what? Repair and improvement, right? Do a working for repair and improvement. Okay, repair and improvement. So repair and improvement. What did we do repair and improvement on? Pool what?
Pool 2.
Pool 2. It was what? 2 motor vehicle engines. So how do you do repair and improvement in accordance with section 12? Okay, first of all, you must first determine the written down value at the end of the year. So first, we need the written down value at the end of the year, right? We need a written down value at the end of the year. So how do we do written down value at the end of the year? The first thing is to get the pool to which the asset belongs. And this was pool 2. And pool 2, since you are standing in the 2017 year of assessment, we can just bring their written down value straight from what? 2016. You remember? And what's the written down value? We had it at 49534, right? So we can do 495,342. Then there were no additions. So straightforward, we need the capital allowance. And this one is for the whole year, right? 365, 365. All right. So this capital allowance is actually notional. It's not real. This capital allowance is just so we can get the written down value at the end of the year. Is that clear? Is that clear?
Yes.
Who doesn't get it? Pool 2 was what percentage? 30%, right? So
30%.
we do 30%. Please, who doesn't get it?
That's useful. Hmm?
Who doesn't get it? Or everybody is okay?
Oh, see also. Obey.
If somebody's background is noisy. Please, is everybody okay? So what do we get for the written down value at the end of the year? Is everybody on point? Are we all on the same page? So we end up with 34673 9. Okay. Now, the next stage is to now get what? The allowable repairs. So the allowable repairs is actually 5% of this pool, right? Always that is it. You get a written value. So you do 5% of this pool. So 5% of this 346,739 becomes the allowable repairs. All right. So 5% of the 346,739. And that gives us what?
17337.
17,337. 17,337 what? 7, right? But we compare this to the what? The replacement cost. What's the replacement charge in the P&L? 51,000, right? So the law is saying that the allowable revenue expenditure it can allow you is this. So any amount left should go to capital expenditure, right? So that amount left becomes what? The excess repairs, right? That is capital expenditure. So the excess repairs and improvement, that comes to what? Your capital expenditure. So there's a capital expenditure left. So every time you do repair and improvement, the law has a mandatory revenue expenditure, which is 5% of the pool to which the asset belongs. Any extra one is excess repairs, right? But let me give you a simple shortcut. Assuming you have already done the capital allowance, but you forgot the repairs and improvement, don't worry. I said don't what?
Worry.
Don't worry. What you are going to do is you are coming to do after your capital allowance computation, right? You are going to do this same working, all right? After you finish the working, then you are now going to get the excess repairs and compute additional capital allowance on it. Then you go and add it to the main capital allowance. Who got what I was putting across?
I didn't.
You see, this one is added to the pool, right?
Mm-hmm.
Meaning that it is also a capital allowance item. So I mean, calculate capital allowance on the excess repairs. That's if you forgot to add it to the pool. So you are just going to say what? 30% off the excess what? Repairs, right? Then you are going to add it to the capital allowance you have already computed.
Mm.
Makes sense now.
Yes.
Assuming you forgot. That's it. Did everyone get it? Did everyone get it? Did everyone get it?
Yes, sir.
Yes.
So we come to excess repairs. We add it to the pool, right? And what pool was that? Pool 2.
2.
So 33,663 what? 663, right? 33,663. So 663. Okay. Did something else happen again? Did something else happen again? Okay. So I think nothing else happened, right? Apart from the trademark that we bought, right? Apart from the trademark that we bought. So this one's from pool 1 to pool 3, this becomes their depreciation what basis, right? So this becomes their depreciation basis. So we need that. So 2959 plus the 130,000. That's 15959 for this guy. Then we have 495,342 plus 33,663. That's 529,005. 529,005. Then this is still 5959. Okay. So we have this. Now we need capital allowance, right? That's for 365 out of 365. Good. So 15959 by 40%. That gives us 6384. So that's 6384, right? Okay. Then we have 529,005 by 0.3. Yeah, 0.3. That's 158,702, right? Then we have 5959 by 0.2. That's 10,192. 10,192. Okay, so this capital allowance for the pool. Capital allowance for the pool 1 to pool 3 asset, right? So because of space, that's why so that's adding these ones, right? So that's 6384 plus 158,702 plus 10,192. That's 229,278. 229,278. Okay. All right. So now I need capital allowance for the pool 4 and 5 assets, right? You know, you've seen I've separated them. Yes. So pool 4 and pool 5 assets, what assets did we have? So these ones, you can't put them together. So we have factory what? Factory building, because each asset is in its own pool. Does it make sense? So we had factory building, we have office building, and we have the trademark, right? So factory building, we have office what? Office building, and we have what? Trademark. So this is why you have to speed up. Now, as our 2016 year of assessment, we know the basis period is from when? 1st April, right? 2016 to what? 31st what? December 2016, right? Okay. So this is what we have. So what's the written down value brought forward? There was no written down value, right? Or cost. It was cost rather. So we bought factory building for what? 800,000, right? Now we bought office building for 420,000. But here is where it gets interesting. You see, the office building, we can't bring the whole 420. Who can tell me why? Why can't we bring the whole 420?
Because 10% has been rented out.
10% has been rented out. Yes. So what are we going to recognize? We are going to recognize only the 90%. Does that make sense? Does that make sense?
Oh.
Does that make sense?
Yes.
Okay. So 90% of the 420,000 will be what? 378,000. That's what we recognize, right? Yes. The trademark as of 2016, it wasn't there. So in that case, we need capital allowance. And this capital allowance, remember, these are straight line, 10 years, right? Or 10% on cost, 10% on cost. This guy was 10 years, not yet in. It will come in 2017. So this one, it was 275 days out of 365 from April to December, right? So we do 800,000 at 10% by the 275 out of 365. So that was for 2016. That's 60,274 for this one. This is just revision. I can decide to ignore 2016 for this one because we don't really need it. 2017, we know that it will still be on 800, 378 and the other, right? So the next one too was what? 378 at 10%, right? 275 out of 365. And that's 28,479. 28,479. Right. Okay. This one, there was nothing there. So based on that, we get our written down value carried forward to the next year. Not very important because I could have just done 2017 straight. I'm just showing you how it would affect this one as well. This I could have just started from 2017 because this one is straight line, right? So in the 2017 year of assessment, I bring the written down values forward. That's this one and this one. I bring them down. Then additions. It was the trademark that had an addition, right? The trademark, we bought it for what? 75,000. Then you remember that 5,000 for the legal fees. Do you remember?
Yeah.
So that gives us 80,000, right? So now if I want capital allowance, This one, the capital allowance, is on cost. Remember, it's 10% on cost, the cost. So this one, because we operated a whole year, capital allowance will be 80,000 for this guy, will be 37,800 for this guy, and will be 8,000 for this guy. Do you understand? You see, it wasn't really necessary to do the 2016, right? Do you all agree? Because this one is straightforward, 10%, 10%, and 10 years, right? So that's all. That becomes a capital allowance for the pool 4 and pool 5 assets, right? So we have 80,000 plus 37,800 plus 8,000. That's 125,800, right? For this capital allowance. So my total what capital allowance will be this 125,800 plus the original one we calculated at the top, 229,278, right? So I add it to the 229,278. And my total capital allowance becomes how much? That's 355,078. 355,078, right? So that is it. Are we okay? So that is it. It was a lot of work, eh? That's ICA for you, don't stress. But I hope it was clear.
Yeah.
Okay, so now what's the next thing? The tax liabilities, right? So Sechiwa Anam Industries. Sechiwa Anam Industries. Computation of corporate tax liability, right? So computation of chargeable income. So their chargeable income and tax liabilities for the 2017 year of assessment, right? Basis period. So you see, always I bring the year of assessment and basis period. They mark it. All right. Those who don't like writing it. So the basis period we are doing from 1st January 2017 down to what 31st December 2017, right? So nicely done. So we can start with what? Our profit per the account or profit per the account. And the question gladly told us that they made profit. They recorded a net profit of how much? 762,800. No be so.
Yeah.
Yes, let me just delete all these annotations. Right. Yes, 762,800. So I bring my 762,800, right? Then I told you the next thing to do is to less any excluded income, right? So excluded income, first of all, here we had gross rental income, right? So this gross rental income is a final withholding payment. It doesn't belong here. So that gross rental income of 180,000 has to be taken out, right? Then we also had the net interest. The net interest income. If it was gross interest, I wouldn't have touched it, but it was net. Net doesn't belong here. So the net interest was 10,028. Does it also belong here? It's an investment income anyway. So 180,000 plus the 10,028. That's 190,028. So 190,028. I'm going to take this one out after deducting that. So 762,800 minus 190,028. That gives us 572,772. So 572,772. All right. Then now we are going to add back any disallowed deductions, right? I'm going to add back any disallowed deduction. Are we okay? So disallowed deductions. What did we have? So first, you see the repairs that I did, the replacement. I'm going to add the whole thing back so that I can only come and deduct the allowable portion. So replacement cost, I'm going to add the whole 51,000 back. Anyway, you can just add back the excess, but I want to add everything back. Then the depreciation, right? The depreciation 57,000. I want to add all back, excluded expenditure. Capital allowance will be granted instead. Then the trademark. Trademark is a capital item, right? It doesn't belong here. So how much did we add for the trademark? How much did we add for the trademark?
80,000.
80,000. So the whole 80,000 must be reversed. Apart from that, what else? The penalties, right? The penalties and fines of 5,000 that was paid to the factory inspectorate directorate, right? Inspectorate department, sorry. Then we have what? Computers. We bought additional computers for what? 110,000 Ghana cedis will be added back. Does it belong there? Then computer server, right?
Mhm.
You also bought computer server of 20,000. So all these things must be added back because you are reversing them. They were deducted. So adding them back makes them zero. So 51,000 plus 57,000 plus 80,000 plus 5,000 plus 110,000 plus 20,000. That's 323,000. Okay, so we add 323,000 plus our 572,772. And that's 895,772. 895,772. Okay, so that is it. This becomes our adjusted what? Our adjusted profit. So once we get adjusted profit, now we are going to less other allowable deductions. If you like, you can add other income, right? So let's just say add other income. So other income can come as investment income and others, right? So here we had the gross interest income. So I'll add back the gross interest. Remember, we had net interest. The interest that they've taken 8% from it already. That means I'm left with 92%, but I want the 100. So 100 out of the 92 times the 10,028, right? So this one times the 10,028. Was it 10,028? Was it 10,028? Let me go and check. Yes, 10,028. So I want the 100%, the original interest. So 10,028. That gives us 10,900. That means the interest is 10,900. So this becomes the total assessable income. So our 895,772 minus our 10,900 plus 10,900, sorry. And that's 906,672. So that gives us 906,672. 906,672. Okay, so this gives me a total assessable income. We are now going to less allowable deductions. Total assessable income. Okay, so assessable income less allowable deductions gives us our chargeable income. So we are now going to less other allowable what? Deductions. So other allowable deductions, we first start with what? The obvious one, capital allowance. That's the one that has a lot of marks. So capital allowance. So the capital allowance, we calculated it as, what did we get it as? 355,078, right? So we had our capital allowance to be 355,078. Then we had what? Then we had allowable repairs, right?
Mhm.
You guys remember? It was 17, what, 33 something? 17,337, right? 17,337. Then what other allowable expense did we have? The unrelieved loss. Do you remember?
Mhm. Mhm.
There was a carry forward loss from the last year, 150, 200 assessed loss. So 150,200. Was there any other thing that is allowable again? These were the only allowable expenses which are not in the P&L. So we have a 355,078 plus 17,337 plus 150,200. And that's 522,615. So 522,615. We take it out. So our 906,672 minus this, that gives us 384,057. 384,057, right? And that now gives us our chargeable income, right? That now gives us our chargeable income. So now we tax this. It was found in a regional capital, right? Regional capital, we get a 25% tax rebate. So this one will be taxed at what? 18.75%. True or false? Because it's in a regional capital. That means you get a 25% discount on your tax rate, right? Because you find yourself in a regional capital. Tax rate. So this by what? 0.1875. That gives us 72,010. 72,010. That becomes the tax we are going to pay, right? Yes. But that is not the end. Why is this not the end? Even though this is the tax that you are supposed to pay, remember that you had some gross interest, right? You had this gross interest that you added. You have already paid the tax on it, but you still added it to your income. So you are going to get withholding tax credit for that. So you are going to less interest withholding tax. It's a credit. It's a tax credit, right? So the interest was 10,900 and the tax on it is 8%. So I'm going to take a credit for this. So 10,900 by 0.08, that is 872. So that 872, we will have to take it out. I get it. And that gives us what? So 72,010 minus 872. That gives us 71,138. 71,138 as your net tax what? Payable.
Yeah.
But still, we are not done. Say, Ebe, say, why are you still not done? Remember, there are some other taxes in the question. Which one is that? The gross rental income. So the gross rental income is from what? A commercial property, right? So since it's from a commercial property is 15%, right? So 15% of the 180,000 that we had to pay is gross, meaning it hasn't been taxed. So 15% commercial property, that's 27,000. That's another tax here, which you have to disclose and pay. All right, the question was quite mechanical, but I believe if you can solve this question, there's no other corporate tax liability question like this for manufacturing company that can beat you. Right, this question is quite mechanical. There are other ones too. As we go along the line, we would deal with them. Are we okay? So I'm sure maybe the next meeting we'll solve something on petroleum and mining, or maybe charities or trust. I don't know, but I believe it was a bad session. Though the network was bad, but I believe the session wasn't that bad. If you have any question, you can ask before we call it a day.
Hello,
everyone.
good morning.
Good morning.
Please, my question is not related to what we just did.
Okay.
It's not even a question, yeah. I just joined today, so I want to find out how I can get the videos and notes for what
Okay,
you have.
for the session I did with them, I think we did one on insurance. That one is on the YouTube channel. This is also streaming on YouTube, so you can get access to it. The very first session too is on YouTube, the tax administration. So they are all on my YouTube channel. You can get access to them.
And the name
Just
is?
go to Prof Training Solutions.
Okay.
Yeah.
Okay. So aside these two, what about other notes on taxation?
What about
The other notes you have done, the other lessons you have done from when you started to today, are they all on the YouTube channel?
yes, you should get all my lessons on the YouTube channel.
Okay.
You can go to the playlist and look for advanced taxation. You see so many videos there. So,
Okay.
all right.
Okay. Thank you.
You're welcome. All right. Have a nice day.
You too, Bill.
Same to you, Prof.
I
You
hope
too.
today's session wasn't bad. I was actually juggling between the courses. That's why we weren't meeting frequently. But now I've gotten some tutors to hold the other courses so we can be meeting frequently. Okay. All right. So I'm sure tomorrow is what? Tomorrow I'll be meeting you for what course? I have to check. What course am I meeting you for? Is it PSA?
Tomorrow morning, Wednesday, yeah, PSA.
Tomorrow is. Okay. All
Prof,
right. Yes, please.
please, for the regular class, do you have for online or just face to face?
It's online. No, all our classes are online. No, face to
Okay,
face
okay.
will start at site. Yeah, and the regular class is very intensive. Some people give up along the way because we will stress you. You want to pass, so we'll stress you. Pass. All right. Have a nice day. So I'll see you tomorrow morning for PSA.
Okay. All right, thank you.
Is PSA and what on the timetable? Let me see tomorrow. Tomorrow I have two clashing courses. That means I need to get somebody to do the PSA. Because tomorrow I have advanced audit and assurance at the same time PSA. I can't teach all the two at the same time. So I must take one. So tomorrow I'll take the advanced tax, the advanced audit, and I'll let someone take the PSA. I believe that is not bad. But I really wanted to do PSA tomorrow. So maybe.
Then do PSA
But
tomorrow.
Can do
uh,
PSA
but no,
tomorrow.
and
I
nobody
guess it's
wants
not
to teach. Nobody wants to teach the advanced audit. So
okay.
that means I have to teach the advanced audit and leave the PSA for someone. All
You have
right.
to make time and teach us the PSA as well.
Prof,
But there
when
are
will you
some
start
people also
the
doing.
PSA, the regular session?
Oh, it has started though. They've had like 3 or 4 meetings, it has started. And it's very
Oh,
intensive. You can register and join. Yeah. All regular sessions are running. Oh. Regular
okay.
sessions and Passco started the same day. So every class is
Oh,
running. Yeah. All right. Have a nice day.
same to
So
you.
I'll
Bye.
post a poll. If I see the number of people doing the advanced audit are small, then I'll do the PSA. So
Okay, okay, okay. So, nice day. Bye.
all right.